What's up guys, welcome back to the channel. In today's video we're gonna be having fun with some reactions. React to the most popular trading videos, losses, wins. We'll see what my editor has for me on the trading world. So it should be a fun video. I'll try to be nice and hopefully we can, learn from some mistakes or what not to do, or maybe we can learn something to do.
On April 24th, I thought that it would be a great idea to place a ton of out-of-the-money call options before Tesla Motors releases their earnings. I thought that they were going to demolish their earnings, which of course they did, but I never took into account IV Crush, also known as implied volatility, which absolutely demolished the value of my out-of-the-money contracts. In this video, you're about...
Alright, let's stop that right there, guys. If you're going to be trading options, you guys know, I trade options too. You gotta know what the options do, man. This is the main issue. Like, options are dangerous, options are this. It's because you got people like this that are gambling. They like, the news is coming out. They're like, well, what's a quick way to get rich? Out of the money options. And if you're watching this, more than likely you've done that before. I already know where this is going, so this should be a fun one.
to see my live reaction to losing over $6,000 in less than 30 seconds the day after earnings. So this all began on Wednesday when Tesla released their earnings after hours, and I was sitting in front of my computer anxious to see if they beat their expectations, which they did. I saw that in after hours, Tesla shot up $80 and I was already celebrating, posting
I love the music.
on my IG story like a cocky little fuck, talking about how I was gonna make $10,000 to $12,000 the next day. You would think that when...
Alright, quick lesson here. If you're trading options, you can only trade them 9:30 a.m. EST to 4 p.m. EST. This means a company reports earnings. Earnings report is how much a company has made a quarter, what's their earnings revenue, those sort of things, and then they give a guidance over a phone call. So it means investors kind of make trades after the market, and the way for people gamble that, right? They gamble by buying options and hoping the next morning it opens up. All times earnings have an initial reaction. For example, in this case it looked like earnings of Tesla were good, so it went up. But then when everything's said and done, all the numbers come out of their earnings report, it might open up at a much different price, and it gets people screwed, which seems like this guy.
When the stock goes up, you make money, right? Yeah, f you, IV Crush. What most people don't realize when playing earnings is that your contracts lose a ton of value when they expire the next day, especially if they're an out-of-the-money contract. I've made 10 grand before in a single day, and it was from an in-the-money contract with a bigger time gap, which is extremely different from an out-of-the-money contract expiring the next day. But anyways, I don't want to bore you with the details. Look how retarded I look expecting to get $10,000 from this position, LOL. So we got 4.
Yeah, looks young too.
We're gonna close them all.
Negative 10x signal.
And we're up. What the fuck? Why did it say I'm down 5 grand? What the fuck?
So the phase of disbelief is what everybody goes through when you're learning options. You have to understand that implied volatility is something that moves the options price. You have intrinsic value, that is the actual underlying dollar amounts of the Tesla shares. And you have extrinsic value, which is your implied volatility and how far out of the date your options are. And your extrinsic value, which means implied volatility in this case, has gone down a lot. Why? Because market makers will raise the implied volatility when you have a major news lined up, and after the news it comes down, which means during earnings, to make money with options, you really need to, let's say usually a big move is 3%, you need to go 5 or 6% to even see a profit. So it's extremely dangerous, and this guy didn't do so much.
What the fuck? No way.
So the sad part about that, it seems like this guy sells his own signal with like 10x signals. I think it looks like it's his own brand. I hope it's not, because if you don't even know the basics of how to trade options, I don't understand how you're giving signals, how you're coaching people to trade. So I don't know who this kid is, but good luck. Please do not sell a service if you're not qualified to do so, okay?
Okay, I just launched some AMR.
Oh, this one's a classic. This is always, I never get old of this one.
Bounced up a little bit, past this 50 period moving average. Good thing this chance, good chances think you go green, so maybe make a nice little chunk along with 1,000 shares. Let's see what happens with this thing. Okay, come on, just keep on moving. Shit, come on, man.
Instant
Looks like
retread
it's got some
candle.
support right here, so you know maybe it'll hang on to this 16 area, bounce back up. Come on.
Ooh.
Oh shit, dude! What the? I just lost $1,500. What the? Oh shit! Oh, no, no.
That one's a classic, guys. That one's a classic. That one is when you trade these smaller cap stocks, which he was one of those more obscure stocks, is you have to be careful of a share offering. So whenever a stock is doing well, a lot of times the company will sell shares to raise capital, which like you saw in Nukes the Price, which I believe that's what happened in this case. I don't have the full proof, but that's what that looked like. And also when you're trading such a high risk stock, guys, use a hard stop loss. You see that guy, no hard stop loss, got completely just milked by the market. And he saw he was praying. He was like, maybe I'll hold this level. You see an ugly candle, get out, wait for confirmation, then get back in. That's an issue that we have as traders. You're so scared of like just being wrong, man. It's okay. Like I do this all the time. Like I take a trade, I start not to like what I'm seeing, I'm getting out early. I'm out that motherfucker. And then if I see again something that I like, I'll just get back in. There's no problem. Get in, get out, get in, get out. Be like water. Like, is that what Bruce Lee used to say? You want to be like water. You know, you're in a bottle, you get a ship with a bottle. You're on the floor, you get a ship with a floor. That's what you want to be as a trader. You don't want to be the trader that's like, no, I have an ego. I am right. I don't need a stop loss. I don't need to learn anything else. Like, that's what you don't want to be, because then you take those huge losses that wipe out your trading account. Luckily, it says you only lost $1,500, which you can recover from that. But if it was a large amount, you could definitely get demolished.
What's up, guys? This is how I lost $25,000.
All right, now we got my boy TJR. How he lost $25,000. I see him make $40,000 in a day, so not too bad. But let's see.
The Nasdaq today. TJR is not back. In fact, TJR is washed. I suck at trading. But with that being said, let's get into how I found my daily bias, why I even wanted longs for the day, and why I still low-key be thinking that we should still potentially be able to complete my daily bias. I know I sound fucking ridiculous, but I have a vision, and I think...
So one thing that I hate is it's a newer thing. I see traders do it. It's a daily bias. I believe when you go into the markets, you should not have a bias. You should not be like only longs or only shorts, because like you see in this case, he was focused on only one idea. When the shorts present themselves, he did not take the trade, got clapped, right? And you're just hyper focused on one thing versus like I just told you guys, be like Bruce Lee, like water. You want to adapt. What I personally like to do, not have a daily bias, and what I like to do is mark out key levels on higher time frames that once price gets to the high time frame key area, look for a small time frame entry based on that.
If I look at this, we had a high time frame, a daily SMT on these lows. So we can see that NASDAQ made a lower low and ES made a higher low. Okay, typically I don't use and find my daily bias off of SMTs on the daily time frame. Matter of fact, most of the time I don't even look at the daily time frame, but I'm thinking, look, on the weekly time frame, we're still maintaining bullish market structure because we haven't broken structure to the downside yet, but we have tossed wicks underneath these lows. And on top of that, on the monthly time frame, we are more than enough within equilibrium on the monthly time frame. And as we know, this is a freaking index. Like, most of the time we move up, and especially if we've already gotten that big of a retrace on a higher time frame, I would assume for us to start turning around now. But anyways, that was kind of what I was looking for and at on the higher time frames, and why my initial bias was bullish. Now let's go into the lower time frames and let's look at this. During London session, like I had mentioned, we had this sell-off, we took out these lows, and then we started this. We had London session sweep out of these lows right here, boom, and then we started the reversal, and then boom, New York pre-market opened at around 8:30, so I was like, okay, cool. We had London session manipulation taking out these 4-hour lows, and we're already seeing it reversing to the upside. So for me, I was taking...
So look at this picture right now. Where did you go wrong? Yes, you took out the lows, which was good that he mentioned, but look what you do during New York session open. You took out, he has the bar like right over at this precise moment. You took out equal highs into a larger time frame. You see on the far left, bearish fair gap, which means you have a ton of bearish levels against you. So do you want to long into that? No. You want to wait for price to come up, move up, come back for a retest, and then you take your long. That's why more than likely trade did not play out. He longed, did one thing you never want to do, guys, never long, never short into equal highs and equal lows. The way I like to describe it, imagine if you swing high and you swing low, and then when you go super, that's your Super Saiyan, and Super Saiyan 2 is equal lows, equal highs, right? So that's 2. And you have 3 equal lows and equal highs, that's Super Saiyan 3. Think about it in that regard, and you don't want to bet against those. Now, they're not going to work 100% of the time, but wait for confirmation if you see that, because again, you longed into equal highs, they got taken out, and the huge bearish for value gap, usually it's going to get you negative $25,000 on the day. All right, we got our boy, Man by FX.
Nothing to really hold on to here. We don't have support to go off of, so that's just great. That's just wonderful. That is just fucking sweet.
Trading US 30, guys, stay away from US 30. That's all. That's the first advice I can give you. Stay away.
Do I risk it? I'm taking the sell. I'm taking the US 30 sell. I am selling US 30. If this fakes out again, bro, I'm going to lose my shit. That was fucking gorgeous, baby. There's nothing better than losing $16,000. No, there's nothing better than losing $17,000 after winning a bunch of $40,000 trades. Why don't you just eat into my margin just a little bit, huh? It's doing what it's been doing every single day, and that's just... It just sits at that spot. It just sits at the spot that it kind of breaks out.
So it's a little, the charts here are a little bit smaller. We'll try to zoom it in, but what you can see here, if you're a breakout trader, which means when you have a key level support and resistance, you take a short as soon as that level is broken, you run a risk of getting faked out, which means price will hunt those breakout traders that are seeing a certain level as a key level and trade long or short once that level is broken. That means it grabs all the liquidity, all those people that try to short in this case, and then it rallies it back up. So you turn them into exit liquidity. And you want to be careful as you're a breakout trader. I personally do not like to trade breakouts because this happens a little too often. You get faked out, and you can see that's how you lost $70,000 in this case.
And it just sits there for fucking hours. But
and he seems like he even knew that, like he knows, like that, like it already had happened before. He still falls for it. It's kind of like, you know, the kid that's like, hey, I'm touching the fire. It hurts. Don't touch it again, maybe. Anyway, guys, I hope you guys enjoyed this. I like this to turn into a series if you guys want to recommend TikToks, YouTube videos, Instagram reels, whatever of the funniest, best, worst, interesting traders that you want me to react to. Trust me, leave it down below. I'll make sure to react them. As always, like, subscribe, comment. Hope you learned something, stay entertained, and peace out.